2024 looks to be the year in which there will be more acceleration in the destruction of money. The destruction of money is the biggest challenge of the next decade. It has been a problem in the past decade, but it's likely to be much worse in the following one. Let's look at a few graphs. The first graph shows us global money supply. Global money supply is actually not reducing as much as many expected. There's been a small reduction, not even a decline if you look at it. And what we are likely to see in the next months is an abrupt increase in global money supply because of the looser monetary policy added to the fiscal situation of governments that continue to spend like there's no tomorrow, with another important factor. Looser monetary policy also means looser credit conditions. So we're likely to see an explosion in money supply very quickly. Let's go to the next graph, which will show us what happens when you have a so-called restrictive monetary policy that is actually not that restrictive, because central banks have reduced a bit their balance sheet, but nowhere close to coming back to pre-2008 levels. The bloated central bank balance sheets is a huge problem because it disguises risk. It disguises risks by containing in their balance sheet what is the time bomb of government debt. However, more importantly, if the balance sheet does not reduce quickly, it not just keeps risk well above what we expect, but the level of risk is actually going to rise as the fiscal imprudence of government accelerates, which is very likely. And if we look at the case of the United States, huge problem. Let's look at the next graph, because that shows us how challenging the situation is. The United States has never entered into a recession or a slowdown in the economy with such high level of deficit. The deficit of the United States is simply unsustainable. More than $500 billion from October to December means almost $2 trillion, and is likely to explode as well in 2024 because the December figure, 125 billion of deficit, showed a reduction in receipts and an increase in expenditures. So that trend is very worrying, because the Biden administration promised lower deficits because of the Inflation Reduction Act and lower deficits because of the tax hikes. None of those things have happened. The tax hikes have not worked. Receipts are actually not improving. Particularly the December figure is very, very poor, and expenditures have gone through the roof. And the problem in the deficit in the United States is structural because of expenditures. That means more money printing in the future. Let's go to the next graph, which will show us how challenging that situation is, because deficits are not a tool for growth. They are a tool for stagnation. The CBO, the Congress Budget Office, shows that the projected growth, the expected growth of the US economy is not improving. It's actually getting worse. Massive level of debt, huge expenditures, a rising cost of debt. All of those factors are like a huge weight on the economy. And those huge deficits are not reserves for the private sector and great things that the US can spend all that it wants whenever it wants. It's making people poorer, higher inflation, more persistent inflation, certainly, more taxes, lower growth. Lower growth, more taxes and persistent inflation, impoverishment of the population and destruction of the middle class. Of course, these figures are fantastic if you compare them with the euro area, because the euro area doesn't grow at all. It's not that it's low growth, it's that it's no growth whatsoever. Massive level of debt, massive level of government spending, and even higher level of unemployment. Let's go to the next graph, which also shows us how challenging the situation is. By 2050, each American citizen will owe about $1 million of public debt. Public debt is just rising non-stop. And it is ludicrous to think that that increase in debt is going to be reduced with increases in taxes, because there is absolutely no revenue measure. There is no revenue measure that would reduce the deficit from 2 trillion to zero. It is impossible for the United States to achieve a zero deficit with massive tax hikes. Furthermore, those tax hikes are proving to be a perverse incentive. When the government hikes taxes and some receipts start to go up, when taking advantage of an economy that is still bouncing back, what does the government do? Spend more. So then what happens is that when the cycle turns and receipts start to go down, the impact on the economy is larger, the tax burden is higher, but governments continue to spend even more. So it's always a trick. They say that they need to raise taxes in order to reduce the deficit. Then when they pick a little bounce in receipts, they spend way more. And by then, they have already created the pillar of a much larger deficit. Deficits are always a spending problem, not a receipt problem, because receipts are cyclical and expenses are not just accumulated, but annualized, growing. And if you look at that, most of the increase in the deficit and the debt is coming from mandatory spending. Very dangerous. The only reason why you have to be relatively positive on the US economy is because it is much better than the euro area. It's not because it's doing well, it's because it's better than other developed economies. Let's go to the final graph and look at the alternatives. So what alternative do we have? There's going to be massive printing. There's going to be massive destruction of the purchasing power of the currency. No wonder Bitcoin, gold are proving to be solid alternatives to the destruction of the purchasing power of the fiat currencies. There's going to be massive debasement of fiat currencies. And that's why central banks want to implement digital currencies. That's why central banks want to continue to keep their fiat currencies as the only alternative, and they will use as much repression as they can from the government side, obviously, in order to avoid people from escaping the destruction of the purchasing power of the currency. But ultimately, that massive level of debt means much more printing, a lot more taxes, way more deterioration of the employment, real wage, and growth of the economy. No, governments don't create growth and certainly don't improve the trends of growth. They make them much, much worse. Thank you very much for following. It is always a great, great pleasure, and keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.